what are some of the key stocks to watch out for? Let's quickly take a look. Auto giant Tata Motors and Maruti Suzuki are in the spotlight after they're releasing their December sales and production figures. Here's a breakdown of their performance. Tata Motors. Now, Tata Motors reported a total sales of over 235,000 vehicles in domestic and international market for the third quarter of financial year 24 and 25. This marks a marginal 0.26% increase compared to 234,000 units sold in the same quarter of the previous fiscal year. Now, commercial vehicle sales came in at about 95,000 units, registering a 1% decline year on year. However, passenger vehicle sales showed a modest improvement. We're talking about Tata Motors of 1% year on year, with about 139,829 units sold. Now, this mix of performance across segments reflects Tata Motors' focus on stabilizing its portfolio amid challenges in the market condition. Now, shifting focus to another leading giant in auto, and that is Maruti Suzuki, the leader of the passenger car segment, reported a robust sales figure for the month of December. The company sold about 179,000. Company sold about 178,248 units, representing a significant 30% year-on-year growth compared to 137,551 units in December of 2023. All right, this is as far as Maruti is concerned. The domestic sales rose 24% year on year to 132,000 units, while sales of other OEMs doubled to 8,306 units. Exports were also strong, contributing about 39% to 37,419 units sold. The broader based growth underscores Maruti Suzuki's strong demand across domestic and international market. Another stock to watch out for would be Hero MotoCorp. Now, Hero is facing challenges after receiving an additional tax demand of 26 crore rupees from Income Tax Department for the assessment year 2021. The development comes as the company navigates regulatory and other complexities, focusing on its long-term growth strategy. Now, another pack which is going to be in focus is Telecom Stocks. The telecom sector is buzzing after TRAI, or Telecom Regulatory Authority of India, reported a 10% year-on-year growth in gross revenue for September of 2024 quarter, totaling 91,426 crore rupees. This growth is largely attributed to mobile service providers raising their tariffs. The revenue surge highlights the sector's resilience and increasing acceptance of higher service cost among consumers, making telecom stocks a key segment to watch out for. Another stock which is in news is Ambuja Cements. It has cleared a significant regulatory hurdle. It has received a no adverse observation letter from BSE and a no objection from NSE for its amalgamation with Adani Cement. Now, that is as far as Ambuja is concerned, but shifting focus now to Reliance Power, a subsidiary. Sasan Power has now made a 150 million bullet repayment to IIFCL UK, fulfilling its debt obligation as of 31st of December. The strategic repayment is expected to enhance the company's liquidity position, improving its credit ratings and strengthening its debt recovery metrics. Reliance Power, which has become a zero debt company, also raised about 1,525 crores recently through a preferential issue of equity-linked warrants. These developments signify a stronger financial footing and a clearer path towards growth for the company. Now, Reliance Power, we'll put that up on our screens right now, reacting positively to that news. It is up today almost 1%, 1.7% we can see on our screens right now. So that is good news for Reliance Power. So those are some of the stocks that we will be focusing on. I have to ask you at this point in time, how are the markets positioned given that markets have reacted positively for the first 2 days of this trading session, at least opened in the green. There's a lot of volatility in 2024. What are we making of how markets are positioned, at least in the beginning of this year, Suyash?
Shweta, you are absolutely right. The markets had a rough 2024. Remember, the markets have seen a correction of about 10% from the peak, and the most of that correction came in the last 3 months. In fact, October, November, December, the markets witnessed a crash. And in the past 4 years, we have not seen a persistent sort of a crash that has actually been sticky. Every time the market would fall, we would see an immediate recovery. But this time, it's been a rough quarter for the Indian markets. And, despite that, Nifty is still up by about 9% in 2024, and it has extended its winning streak now. It's on a 9-year winning streak, a feat that no other financial markets can boast. All our global peers have not witnessed that kind of price performance. But the markets, again, they are on a weak footing. The FIIs have been selling. Their foreign institutional investors have been selling incessantly, albeit their pace of sell-off has reduced over the course of the last 3 months. I remember back in October, they sold about 1 lakh crore worth of equities. In October, they sold about 45,000 crore worth of equities. In December, that came down to 16,000 crore of equities. So the overall FII sell-off, although they continue to sell from the Indian markets, the quantum of sell-off has reduced, but earning projections for Q3 they are not inspiring much confidence. Expectations are that revenue growth will continue to remain muted, and because commodity prices have shot up, the input cost for these companies will remain high, and that's why margin will remain under pressure. Consumption again remains a big question for the markets. We saw that in GDP numbers. It wasn't just your rural consumption, but your urban consumption, both the pockets of the market, Shweta, are lagging, and inflation, the food inflation continues to remain a problem. But overall, we have started the year on a good footing. If we talk about, some of the factors that will dictate the market momentum, the market action in the next few days would be one, Donald Trump swearing in ceremony as the 47th US president, which is scheduled to take place on January 2nd. Then we'll have PMI numbers also coming in this week, both the services and the manufacturing PMI numbers. Remember, a reading above 50 indicates that both services and manufacturing sector is expanding, and a reading below it indicates that both services and manufacturing, the pocket is contracting. Then the December quarter numbers, December quarter has finally wrapped up. We'll soon start having the business updates, especially from the banking pack. And remember, again, this is the biggest pocket of the market. It's a major contributor as far as your heavyweight sector is concerned. Then we also have the Fed meeting in the latter half of the month. So that we'll get to see whether the Fed will go for that, one of the 2 rate cuts that it has promised. Although we were expecting a much broader quantum easing before we had that December meet, but the commentary that is coming from the Fed, the US Federal Reserve, as well as Chair Jerome Powell, is not inspiring much confidence.
Very
and
hawkish.
That was, indicating that the markets could remain in a problematic situation.
Absolutely. And then in February, let's not forget the RBI MPC, which will also give us some sort of clarity on where the government is headed, on where, the rate cut cycle is headed for India, given that the government has not been very happy with RBI not cutting rates and blaming RBI for the consumption slowdown.
We do have a new governor. Let's see what happens.
We do have a new governor, and we'll have to see what happens.